Yes, guys. So hope you enjoyed that analysis. Now moving on to presumptive taxation for non-residents and foreign companies. For non-residents and foreign companies, you have 44B, that is shipping business. Then you have 44BBA, that is for aircraft, and you have 44BB, that is profit and gains for extraction and production of mineral oil, so to speak. And then we have engage in civil construction, 40BBB. Four sections we have. So let us just check quickly. Shipping business 44B. So the eligible amount is very simple, guys. Section 44B overrides 28 to 43A. So you can claim what amount of profit? 7.5% is the profit. Will you use this profit amount to set off business loss? Yes, because this section overrides only 28 to 43A. It does not override 72. Can I set off unabsorbed depreciation? No, because this section overrides 28 to 43A but not 32. Can I claim deduction under chapter 6A? Yes, you can. Yes, you can. Definitely yes. So what does this 44B talk about? Non-resident engage in shipping business. Both the things. Amount paid or payable whether in India or outside India to an SSE or to a person on behalf of an account, goods shipped any port in India. So if the ship comes from USA to India, this is covered. On the other hand, reverse case also covered. That is, it's going from Chennai to USA. That is also covered, no problem. Rather than just freight, which is actually what is the amount charged here, instead of that, if I use any other nomenclature like demurrage, handling charges, everything will be covered for sure. Those which are accrued in India only is covered. That is, shipping from somewhere else coming to India or from here going to somewhere else. But if I have a ship which is transporting goods from USA to Dubai and money is received somewhere else, then this section will not come into the picture. So if you see, Mr. Jim is a non-resident and is engaged in shipping business. He received 10 crores on goods which were loaded onto the ship from a port in India, of which 4 crore was received in London. He had also received 6 crore for goods loaded at Miami. Of this, 2 crore was received in India. In this case, since 10 crore was accrued in India, it shall form part of amount specified irrespective of where it was received. And 6 crore which was accrued outside India, only 2 crore will form part of India because 2 crore was received in India. Only that will come. So this will be the thing. 10 plus 2, 12 crore, 7.5%. That would be my 90 lakhs. Then as far as aircraft is concerned, same. Instead of 7.5%, here we have 5% operation of aircraft. So here also same thing. Outside India and in India, both things are covered. So if you see in this example, 2 crores in India on account of carriage of persons from Chennai, it's okay. It operates an aircraft between the Gulf and Chennai. So since it is 2 crores in India on account of carriage of passengers from Chennai, it is covered. 1 crore in India receiving covered. 3 crores in India receiving covered. 1 crore in the Gulf on account of carriage of passengers from Chennai. So in Gulf you are receiving. So hence it will not be covered. Received in a business activity. But here guys, on account of, though it is received outside India, you cannot say that it is not covered because it is carrying passengers from Chennai. So in all the cases, tax incidence, 3 cases received in India. Here it is not received in India, but it is received for a business activity in India. Hence everything will be covered and taxation will be at 5%. So certain turnkey projects, civil construction turnkey projects, and also for extraction of raw materials we'll see. Apart from that, there's also one more section, section 172. Those are the companies which are shipping companies which come to India and they don't want to, they want to go out and we don't know whether they're going to come or not again. So for them, rather than making the assessment year next year and previous year this year, previous year and assessment year both are the same for such companies. So if you compare 44B and 172, 44B is a charging section for that particular shipping business where the port in India or you are depositing outside India also, goods, etc. Whereas so 172 is more of a recovery section, not a charging section. This is for goods shipped at India, which from USA goods come to India and they go off. I don't know whether they'll pay tax or not. That's why I will collect the tax then and there. There'll be tax department in all the ports, so to speak. Here there is 7.5% plus, which is at the normal rates of taxation. Whereas here there's a flat rate of 40% plus 4% plus cess, etc., plus surcharge if there is a turnover threshold. This section overrides 28 to 43A, that is 44B, whereas 172 overrides the entire Income Tax Act. In 44B, I can claim set off because this will override only 28 to 43A. It will not override 72. But here, 172, no set off is allowed. Chapter 6A deductions can be claimed under 44B. In recovery, no deductions can be claimed. Here, assessment year is different, previous year is different. 172, both are the same, is what I have discussed, right? Yes. So apart from that, there are certain turnkey projects. In those turnkey projects, there is concept of deemed profit. So let's see here. So turnkey projects, deemed profits claimed by SSE. 10%, yes, you can claim. What are turnkey projects? These are projects which are given by the government to some party. They will do the project, infrastructure project, or they'll build an airport and directly give it to the government, saying that, look, you can directly take it up now. You can just turn the key and start the project on. So regarding that, if you see, foreign company engaged in the business of civil construction, mind you, for NRI, this section will not come. It's only for foreign company, not for NRI, or for non-resident individual also. Engaged in the business of civil construction or the business of erection or plant and machinery or testing or commissioning, turnkey projects. 10% of the gross amount paid or payable, whether in India or outside India, shall be taken as your business income. So basically 10%. So if it is 10%, can AO check the books of accounts and say profit is more than 10%? No. There's a case law, DIT versus DST, Noel GmbH. So there AO has no locus standi or no right to claim this. If it is more than 10%, can I do it? Yes, no problem, it is allowed. Less than 10%, 44 BBB2 will come, whereby you can claim less than 10%, but you have to get your accounts audited, you have to maintain accounts, then it is possible. And for mineral oil, etc., that also same thing, guys, 10% is there. But one interesting thing to note, if it is for technical services or royalty, that is for planning for extracting of the oil, for extraction of the oil, 44 BB will not come, 44 DA will come, and 115A will come, 293 capital A will come, that is international taxation. Please note the wordings in the exam only if they give you hiring of manpower and plant and machinery for extracting mineral oil. Again, I repeat, hiring of manpower and plant and machinery for extracting of mineral oil, then 44 BB will come, 44 DA and 44 115A will not come. I have explained the logic in class very much in depth. It took minimum 1 hour to explain the thing. Marathon fellows, just remember this and go. That's it. You do not have the time to sit and do that. Then moving on to some couple of miscellaneous topics. ZCB. ZCB is defined in 2 clause 48 to be infrastructure capital fund, debt fund. ZCB zero coupon bond. Basically, I will sell coupon at 100 rupees and 2 years later, I will take it at 120 rupees. So basically that 20 rupees is the discount. It should be allowed across the life of the bond. 2 years, 12 months, 15 months, whatever. So 248 public sector company, scheduled bank and central government also can notify the ZCB. If a ZCB is transferred, it will be deemed to be a transfer under 247, and ZCB on maturity, sale or redemption, capital gain will be taxable. Then under 2 clause 42A, it is long term if it is held for more than 12 months. And under section 112 in capital gain, there is no indexation for it and tax would be 10%. 194A, there will be no TDS, and 3613A, that's what I am trying to tell, PGBP, discount will be allowed on a pro rata basis, right? So if the discount here, let's say, is, as I told you, 20, and it is spread across 20 months, so every year 1 lakh, 20 lakh into whatever 20 means 1 lakh per month, like that you can take. So if this happened sometime in October to the next 20 months, October to March, October, November, December, January, February, March, 6 months. 6 months, you can take 6 lakhs as a deduction for that particular year. Remaining 12 months next year, 12 plus 6, 18 already done, 20 months, 4 more months next year. So like that, you can take the deduction, that is ZCP. Cool. Then one more question that they will ask, my dear friends, would be, what will happen if you are a film producer? What is the taxation of film producer and what is the taxation of film distributor? For that, rather than doing here as a marathon, I have already recorded an animation video. I'm also into animation and other stuff, which is my area of interest. So I've already created an animation video. So my avatar will come and teach you that. So the next thing that you're going to see is that avatar coming and speaking about that other thing, right? Apart from that, then we will go into the other areas of taxation of AOP, BOI, and probably clubbing of income, and this will complete the entire marathon of part number 1. Part number 2 will have, of course, capital gains, assessment procedure, etc. As and when I record, I will be posting it. Okay. So next, enjoy that video and enjoy the other videos of AOP, BOI, and clubbing and all that.
Hi. As an ardent cinema lover, I always used to wonder how film producers and distributors are taxed. And do they have any special deductions? Do you think there's any difference in taxation if a movie is released in December or if it's released in February? Hello my dear friends, my name is Punarvas Jaikumar and welcome to my YouTube channel. In this video, let's discuss the taxation of film producers and film distributors. Rule number 9 capital A of the income tax rules empowers this deduction as a revenue expenditure and not as a capital expenditure. So what is the amount of deduction that is allowed? The rules define cost of production as the expenditure incurred on the production of the film, except 2 things: preparation of the prints of the film and advertisement expenditure. For instance, the movie RRR was made with a budget of 350 crore excluding salaries to the actors and the director. But adding everything, it came up to almost around 600 crores. If the producers spent 100 crores on preparing the prints and let's say another 100 crores on advertisements, making the total around 800 crores, what is allowed, my dear friends, would be just 600 crores. Now, if SS Rajamouli was presented a Volvo car worth 80 lakhs from the producers, would it be allowed as an expenditure? Courts have held that remuneration paid in kind to the actors or such other members involved in the film shall also be included while computing the total cost of production. So yes, that would be allowed. So, if a producer sells all the rights of exhibition of the film in the previous year, the entire cost of production would be available as a deduction. An important point is it doesn't matter when the movie was released. So, if the rights of the movie KGF 2 was sold in the year 2020-2021, but the movie was released in 2022, deduction will be allowed in 2021 if the producer sells all the rights of exhibition of the film in 2021. The same provision applies even to a film distributor. Here, cost of production is substituted by cost of acquisition. So, the producers can claim 600 crores and the acquirer, for example Netflix, can claim the cost of acquisition as a deduction. In RRR's case, as per the reports, it was around 250 crores. But what happens if the producer himself exhibits the film in some of the areas and sells the rights of exhibition of the film in some other areas? For instance, for the movie Bahubali, the producers took up the distribution themselves in southern India, whereas for the other parts of our country and overseas as well, distribution was given to Karan Johar's Dharma Productions. Here, the provisions are slightly different. If the film is released for exhibition on a commercial basis at least 90 days before the end of the relevant previous year, the entire cost of production of the film shall be allowed as deduction in computing the profits and gains of such previous year. However, if it is released within 90 days before the end of the previous year, then the quantum of deduction would be cost of production or amount realized by exhibiting the film and sale of rights of exhibition, whichever is lesser. Hence, in this case, the quantum of deduction will vary if the film is released on or before 1st January and of the films that have been released after 1st January. Seems difficult. Let's take a couple of examples, my dear friends, to understand. KGF 2 released on 14th April 2022. The relevant previous year for this would be 22-23. The film's budget was around 100 crores, but it crossed over 1200 crores worldwide. So now, if the producer had sold all the rights of the film in the previous year, that is 22-23, then the entire 100 crore is allowed as a deduction. Even if the producer had exhibited the film in some areas and sold the rights of the film in some other areas, the entire cost of production of 100 crore would be allowed as a deduction since the film was released at least 90 days before the end of the relevant previous year, that is before 31st March 2023. On the other hand, RRR was released on 24th March 2022. Relevant previous year would be 21-22. If the producer had sold all the rights of the film in the previous year, that is 21-22, then the entire 600 crores is allowed as a deduction. But if the producer had exhibited the film in some areas and sold the rights of the film in some other areas, then deduction would be as under. 1. Cost of production, in this case 600 crore. 2. Amount realized by the sale of tickets and sale of rights till 31st March 2022. In this case, as per the official statistics, it was around 477.5 crore in 8 days. Whichever is less. 600 or 477.5, whichever is less. Hence, 477.5 crores is allowed as a deduction. So, the producers of RRR would offer 477.5 crores, that is the collection, minus 477.5 crores, that is the deduction, that is nil, as their income from PGBP. What would happen, you may ask, to the difference of 600 minus 477.5, that is 112.5 crores? That, my dear friends, would be allowed in the year 22-23. Similarly, Pushpa movie was made on a budget of 170 crores and grossed over 360 crores worldwide. The entire 170 crore would be allowed as a deduction in the year 21-22 since the movie was released on 17th December 2021, which is before 1st January 2022. I hope you understood this concept now. Let us discuss quickly 3 other very interesting questions. Question number 1. The movie Time Machine, centered around time travel, starring Aamir Khan and helmed by ace director Shekhar Kapoor, who incidentally is a chartered accountant, was filmed almost 100% but was abandoned towards the end. Now, assuming the cost of production for this movie was around, let's say, 100 crore, would this be allowed as a deduction under Rule 9A? There were a lot of controversy over the tax treatment of similar such abandoned movies. The CBDT released a circular settling this issue. They clarified that the cost of production of an abandoned movie is a revenue expenditure allowable under Section 37, subsection 1. Very interesting. Question number 2. Can I claim deduction under Rule 9A if my film was not at all released in cinema halls, but it was directly released on OTT platforms like Netflix, Amazon Prime, Hotstar, etc.? Please note that deduction is allowed only if it is certified by the censor board. Since censor board provisions don't apply to content on OTT, Rule 9 A is not applicable, my dear friends. Rule 9A does not hold any overriding effect on the other provisions of the Income Tax Act or the rules as such. And it should be noted that in case of any expense which cannot be claimed as deduction under Rule 9A shall be claimed under Section 37(1) of the Income Tax Act if the expenditure was wholly and exclusively incurred for business. Third question. In the year 2013, Lucia, an independent Kannada film made by an ex-IT professional, Mr. Pawan Kumar, created history. The movie, a psychological thriller, was made on a total budget of 71 lakhs. It was the first ever crowd-funded movie in India, and Mr. Pawan raised around 51 lakhs from the general public in just 10 days. The movie was also sold to Udaya TV for about 95 lakhs in 2013. Now the question is, out of 71 lakhs, would 51 lakh be allowed as an expenditure because it came from other sources? Now, since it was used for producing a film, my dear friends, Rule 9A would apply. Rule 9A is not concerned with the source of funds. You could have taken a loan as well for your movie. It doesn't matter. Rule 9A is only about expenditure. But another interesting question. Would the 51 lakh be treated as donation and would it be taxed at the hands of the producers? Yes, my dear friends, under the head Income from Other Sources, under Section 56 subsection 2 clause 10 subclause A, 56 to 10A, if the donation is more than rupees 50,000 rupees. Very, very interesting areas that we have discussed today. Hope you enjoyed the video, my dear friends. Please comment below what you feel about this video, and do you need such videos in the future? Do let me know, and also let me know what other topics in taxation or any other subject for that matter would interest you, on which we can release more and more animated videos. Kindly like, share with all your friends and subscribe to my YouTube channel Punarvas Jaikumar Law Classes. On that note, take care my dear friends. See you.